What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. Today is November 11th, 2020. What a day it was. Today we are going to walk through the headline indices. We're going to go under the hood and check out some of the sectors and subsectors. We're going to take a look at some of the trades that I placed today as well as the one that I closed. We're going to look at some of the stocks that I'm looking at for tomorrow. And we are going to go through some options order flow at the end of the video. One quick disclaimer I want to get out of the way. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. So with that being said, let's jump right into it. So we're going to start off with the ES right here, the S&P 500. And as you can see, this is looking like a pretty bullish picture. We are trading above the monthly value area high. We're trading above that 5-day exponential moving average. We did have sort of a blow off top right here on the vaccine news that brought us up to 3,668. But as of right now, we are looking pretty good. This is our third time really reaching these levels. So let's see if we can hold them. But as of right now, there really is no sell signal in this chart. Things would definitely change if we slip below that 5-day exponential moving average. If we slip below the monthly value area high, that would be a totally different story. But as of right now, we're looking pretty good on the S&P 500. We had a pretty solid performance in that one, up 0.74% today. We had the Qs, which were up 2.24% today, our big winner. And then we had IWM, the small caps, down slightly, down 0.04%. And we had the Dow Jones down 0.14%. So today was really the revenge of the growth stocks. And sure enough, as everyone started to write off the growth stocks, as all of the perma-growth investors on Twitter started crying their eyeballs out, we essentially got the reversal. So I always find that funny. Like I've been outlining for you in these videos, once the growth stocks start to correct, you want to be selective and start picking those up. And same thing with the value stocks. You don't want to be buying the value stocks when all the value investors are completely euphoric and they're blowing off. That's where you want to be trimming into the strength. And the same thing applies to the growth stocks. So as you can see here with the Qs, I was actually, getting ready to hedge my exposure on the Qs today. We traded up to the monthly value area high, and that would have been an ideal place for this index to fail, if we were going to fall down and, go through a bearish sequence. But we were able to hold the value area high today, and we actually closed above it. So this is looking pretty positive for the growth stocks and for the NASDAQ. So let's take a look. We'll go through IWM really quick. IWM, sure enough, just as everyone was getting euphoric, then it really stalled out and has done nothing. So yeah, this one again, trading above all of the key moving averages, really just taking a break up here. And, just consolidating. Nothing, again, there's no sell signal in this one either. So let's take a look. We'll go to the Dow Jones last but not least. And yeah, the Dow Jones looks very similar to the Russell, really just consolidating after a really nice run. So no sell signal, but I'm not really seeing any reason to add to positions here either. Next, we're going to take a look at the VVIX. And the VVIX is measuring the volatility of volatility. It's measuring the price of VIX futures. So I always like taking a look at this one. One thing that is noteworthy is that we did tick up slightly in the VVIX. So I always, for the most part, I love adding positions when you have a falling VVIX. When VVIX is on the rise, that definitely signals to me, be a little bit more cautious. But yeah, even right now, it's not really like it's super elevated. It's just coming up slightly. And, we did have a red candle as well. We closed below the 5-day exponential moving average. So not really, there's no sell signal here either. But I certainly wasn't, going out and adding to my positions today. Let's see, I believe the VIX fell again. take a look. Okay, yeah, we have the VIX, trading towards the lows of its recent range. So, I never like to do, I'm not really a guy that does like technical analysis on the VIX, but I do like to see, in comparison to the recent trading ranges, is it at the high end of the range? Is it at the low end of the range? And sort of, is it declining? Is it increasing? That sort of thing. And you can see we had this really nice push lower in the VIX, and now we're sort of consolidating. So again, this to me isn't really a buy signal. It's not a sell signal. To me, this is more of hold on tight to your positions and, see what comes in the days and weeks in the future. So now that we've gone through those headline indices, let's jump into the sectors and subsectors. Let's see how they did. So I have these sectors ranked in terms of their momentum. So as you can see here, we still have those European financials, the regional banks, the energy stocks, at the top of the list. And they've all had great monthly performances. Like these regional banks up 20.2%. This is pretty great. But as you can see, a lot of those were giving back some of the gains, which isn't too bad. A bit of consolidation, a little bit of give back. You can see the regional banks are down 3%. I'll definitely be watching these in the future to see if they really start to come off and this value trade completely implodes, or if this is just a healthy pullback and it'll give people a chance to jump back into these value areas. And we have towards the bottom of the list, we have the innovative tech ETF, we have the home builders, and we have the gold miners. Let's see what had a good day today. It might not necessarily be at the top or bottom of the list, but we can see the ARC Genomics Fund did pretty well. We can see solar stocks doing pretty well, and we'll take a look at that chart in a moment. And it looks like we have fintech. Really, a lot of the growth sectors momentum did pretty well today, and we can see that as well when we look at our style factors. So sure enough, I love this. The momentum had a really good day, up 2.04%, and we had growth up 1.87%. And then sure enough, right as CNBC starts touting the value trade, it starts coming off shortly after. So we can see the high beta stocks, well, they've had a great month. They were down 1.53% today, and the cyclicals down 1.25%. Now we're going to jump into some of the trades that I took today. Really what I was working on today. So as you can see here, I ended up closing out my Cheesecake Factory trade, and this was part of my Dash for Trash little sequence that I had where, we could see that Pfizer data was going to come, and it was looking like, things were going to be pretty positive during that data. Sure enough, we got the data released, and a lot of these trash stocks, such as the cruisers, the airlines, restaurants, all pretty much went to the moon temporarily. So I closed this one out for a 47.6% gain. We'll take a look at the chart. This one certainly was not a perfect trade, but still was able to make out with a nice little gain here for Cheesecake Factory. Yeah, so as you can see, this one has actually been trending up pretty nicely, but we had that explosion higher. And, in a perfect world, I would have taken it off right at the top of that explosion. On this big upward day, I did end up taking off my airline stock. I think it was Southwest on the books, but I was really waiting on Cheesecake Factory and seeing like, okay, how far will this really take me? I'm not going to cut it off prematurely, but sure enough, we did have sort of a bearish engulfing candle, a bit of a reversal. So I decided, I'm going to take this one off the books. My options were for December. And typically when I have an exposure on like this, that's more of a swing. I like to have exposure that's at least, usually about 2 months out. So I figured, these contracts are for December anyway. There's a bit of a reversal today. I'm going to take this exposure off. And then the other trade that I took, again, I was being pretty patient today. Didn't really want to get into too much new exposure just in case things turn around in the market. So I ended up selling the 75 strike puts in Datadog for this Friday, November 13th, and I ended up collecting 90 cents for those. So Datadog was one where they reported earnings last night, and I took a look through the report, and they did just fine. I believe their revenue is above estimates, earnings above estimates. But this one's similar to a lot of the growth stocks. It had just gotten super expensive. This thing up here really turned into a bloated pig, an extreme valuation. And this thing was just priced for perfection, basically. So sure enough, we had a big correction. And here we are now. So this one ended up having a big gap down. And as you can see, this was looking like it was going to be a massive red candle. And, really what I've noticed the pattern with a lot of these stocks, when they miss big on their earnings, they tend to have a nasty red candle, but they will end up catching on resistance. And so, like, for instance, with Datadog, I was taking a look, and I was like, you know what, this 75 level has been a nice support level, for a while. Really, if this thing breaks 75, this stock is completely broken, because anyone that's bought, really since June would be underwater. So I figured, let me sell the 75 strike put. If it gets to that level, I'll end up acquiring some of the shares. And luckily the stock ended up, looked like it was going to be a big red candle, but it ended up auctioning higher throughout the day. So this one, we'll see how it goes. This one expires Friday, but hopefully on this trade, we'll just pick up a couple bucks. Nothing too aggressive. And then let's go through some of these stocks I will be watching for tomorrow. Twitter is one where they had an announcement that they were going to be introducing a new kind of ads for their customers. Twitter is a stock that I do have a long position in, and it's news. They're growing their users. They are pretty profitable. And this one, in terms of the other social media stocks, such as like Pinterest, Snapchat, some of the other stocks that make their money off digital advertising, such as Digital Turbine and Roku, it's growing a little bit slower. So for that reason, this one is valued very cheaply compared to the others. So any sort of news that could signal a revenue acceleration, that gets me very interested in this stock. So this is one I'll be watching tomorrow. I didn't post this on Twitter, but I did buy some calls, on that news. We'll see if this one can get back into the monthly value area. That's one that I'm going to be watching very closely tomorrow. We have Fiverr as well. That had a monster day. Fiverr, I was actually looking at this one closely yesterday in terms of adding exposure. I had added some Peloton calls yesterday, and I added some Digital Turbine calls as well. But, with 2020 hindsight, this one would have been awesome. This one was up, over 17% today. And I will be watching this one tomorrow for some continuation, seeing if we can tag the monthly value area high at 167.51. So that was a great stock. XB is another one I will be taking a look at tomorrow. This one, as you can see, not quite as bullish as Fiverr, but we are really trading. We have a value area low at 40.91. So I'll be looking to see if we can trade above the point of control. I will then be able to use that point of control as a potential stop out point to trade against, or I could even use the value area low as a stop out point as well. Another one that I wanted to take a look at with you guys, I have a position in this one as well. This is FVAC. And I actually did a deep dive on this company as well fundamentally. And I really like the story here. This one, they're in the business of rare earths. And if you take a look, this was a really nice move, up 7.18%. A lot of these SPACs have gotten absolutely taken to the woodshed. And this one, FVAC, is going to be moving under a new ticker. It's going to be MP for Mountain Pass. And this is one I do have a position. And I'll be closely watching this one as well to see if it can trade, potentially even higher. I just wanted to flag that one. And then we have the solar stocks that I'll be watching. I do have a small position in the commons for the solar stocks. I am short some puts in JKS, which is a Chinese solar stock. But this one, I'm taking a look here. This one's had a nice consolidation after a really strong run. And in terms of this new administration that's coming in, they are going to be great in terms of clean energy legislatively. So I definitely think this is a theme that could continue to do well. And I am potentially looking to add exposure in this area. So I will definitely be checking this one out tomorrow and really in the weeks to come for a potential add there as well. And then one thing I wanted to chat with you guys about is we are coming into options expiration week. So in terms of my strategy moving forward, options expiration week, typically there's not much movement. It is a lot of chop throughout the week. So for that reason, I'll be looking to sell some premium for next week. Unless a really good opportunity presents itself, I won't be, diving into a bunch of longs or a bunch of shorts. Really throughout next week, I'll be trying to spend less time in front of the screens, being patient, and really just consciously trying to not take bad trades. So that's something I see a lot of people that get very chopped up during options expiration week, and just something I wanted to flag. And then last but not least, let's take a look at some of the options order flow that we saw today. Let's check it out. We have cheddar flow here. And as you can see, in terms of the call flow, we had 54% calls and we had 46% puts. So it looks like everyone was buying today. At least more buying than selling. Again, we're going to filter for the largest orders, $1 million and above. Oh, wow. Yeah, and you can see not nearly as much activity as we saw yesterday, but it looks like a lot of hedging going on. So you can see we have some SPY hedges going out to January. Sure enough, this is so funny. We have this again where look at these people buying Zoom puts. So this came in at 10:22 a.m. Take a look at this chart for Zoom. This is so classic. And this is the reason, again, I love using cheddar flow, but I certainly do not blindly follow these guys into trades. A lot of times they do get it wrong. So look at this. This is funny. They started buying puts in Zoom. They placed a big order. Zoom has come down significantly. And sure enough, on the day where Zoom bounced, they ended up putting their puts on. So I believe that order came in at around 10:22. Yeah, so funny enough, they placed their order around here and then we just migrated higher throughout the day. We have some Tesla bulls coming in. Wow, the strike price is 120. So this looks like a stock replacement play. We have some people fading the rally in small caps, it would appear. And then JD as well. Let's take a look at JD. This is another one that I find very interesting. I recently had a long position in JD and I just took it off within the last couple days. But yeah, JD also had a very nice bounce. Yes, that one's certainly pretty interesting. So that is some of the options flow. Again, I will be posting my affiliate link for Cheddar Flow if you're interested in doing a 7-day trial. But again, I always post this content out for free, so no pressure either way. I will continue to post this options order flow on a daily basis. So that wraps it up for my market recap. Please feel free to like this video, subscribe to my channel, and I will keep putting out these recap videos. I appreciate you taking the time to listen. Have a great night. Thank you.